Welcome back, everyone. Next, we have Spectra7 Microsystems Inc. It trades on the OTCQB under the symbol SPVNF and on the TSXV under the symbol SEV. It's a high-performance analog semiconductor company delivering unprecedented bandwidth, speed, and resolution to enable disruptive industrial design for leading electronics manufacturers in virtual reality, augmented reality, mixed reality, data centers, and other connectivity markets. Please welcome its CEO, Raouf Halim, as well as Dave Meyer, who will be joining for the Q&A, the interim CFO. Welcome, Raouf. Nice to see you today. The floor is yours. You're ready.
Thank you so much for that introduction. Welcome, everyone, to the Spectra7 presentation. So, first of all, I'd like to welcome Dave Meyer to the meeting, and also I want to remind you our presentation today is obviously under the typical disclaimer. So there's some non-public information here as well. So why is Spectra7 a great investment? Well, there are three major factors. The first one, we are in a highly diversified and diversifying marketplace with tremendous growth, namely connectivity of data center infrastructure, fast-growing, high-margin market. Secondly, we're providing technology and have a significant first-mover advantage with this technology in connecting equipment within data center infrastructure. We have 12 years of experience building these so-called active copper cable devices. Lots of learning. We've forgotten more about this than any competitors have ever learned. It's a very interesting market to be in, demonstrates a lot of high growth, particularly going into 100 gigabits per second, which we'll talk about. So a big inflection point that is upon us. And lastly, we obviously have significant scale that's necessary to support customers and grow the market without getting too big and seeing OpEx really explode on us. We're managing spending very, very carefully. And we've demonstrated significant growth. In 2022, we grew more than 100% over 2021. I think you'd agree that is quite spectacular. And looking ahead, as 100 gig gets deployed in the US in big volume, we think that's going to be very, very attractive for us and demonstrate even faster growth going forward. And year to date in 2023, just this year, in the first 3 quarters, we have reported revenues of $9.6 million, a Spectra7 record high. So that's a 100,000-foot overview of who the company is. Next slide, please. Okay, and a slightly deeper look. So what is Spectra7 about? We're a semiconductor company, as many of you know already, in this category of high-performance analog, which is very unique and diversified and hard to copy. So these are components that get embedded within a cable. Cables are typically just a piece of copper with connectors on either end. We live inside the connector. We're able to do tremendous compensation and boosting and equalization functions that enable the signal to travel across a longer distance on a thinner, less expensive cable. Very important value add to operating data centers and also key customers. So nothing new here. I think many of you know this already. And if you look on the bottom left, you see where we're currently headquartered, which is San Jose, California. Great place to be. And finally, on the bottom right, you see a sampling of some of our blue chip customers. That includes ACES, Molex, who's arguably the market leader in cabling, Luxshare, and Sumitomo in Japan, as well as many, many others. I won't rattle off the names, but it's basically a who's who of end customers that serve this interconnector cabling application. Okay, next slide, please. Okay, a little bit about the history of the company and the markets we address. So top left corner is sort of where the company started many, many years ago. Consumer applications that needed of cabling that was long and needed this compensation device in the connector on either end. That's where we started. It's not a very big market. But then we quickly moved from there to support the augmented and virtual reality market with some big tier customers, most recently Sony with the PlayStation, as some of you are probably aware already. So AR/VR was a big step up for Spectra7, but really our focus has always been on the big win, which is top right, data center infrastructure. And right now, data centers are experiencing a significant ramp as artificial intelligence, or AI for short, is getting deployed. AI is going to be a big thing for Spectra7 as well as other customers and operators, as I'm sure many of you are aware already. And we're very excited by the advent of AI interconnects. These will drive a lot of our growth in the next few years. Now, that's not the end of the story. There are also other adjacent markets that need this class of active copper cables, also high volume. And we have what I would call preliminary design wins, some important names in all of these. In the automotive segment, and particularly in electric vehicles, there's tremendous application for our technology because we make the cabling simpler, lighter, and less expensive. And in electric vehicles, there's a tremendous amount of interconnect within the vehicle for both automation and entertainment. And we have some wins there already with Japanese automobile manufacturers. In the middle, you see one of our newer applications, switching systems. In switching systems, there's applications inside the box that we are now starting to participate in, but as well as obviously outside the box in the cable, as I already discussed, which is sort of our core business. And then the bottom right, 5G infrastructure in short cables, 5 to 10 meters. You need this kind of equalization technology because you can use a lower power, thinner cable, which is what everybody wants. Okay, next slide, please. Okay, so addressing one of our initial high growth markets that we are very excited about going forward as well is virtual reality, or VR for short. In this type of a system, you have a display device, and you have a camera, and you have a device that is very high bandwidth with no electronics in it. So you're looking through this through these eyeglasses, and you're picking up a lot of high performance, high speed video that goes straight back to the host computer. And so the frequency on the cable is very high, in some cases approaching 40 gigabits per second, which is very high speed by anyone's view of this database. So Dreamweaver is the name of our product that addresses this. And as I mentioned, we have significant design wins over many years. The most recent big win for us is the Sony PlayStation. And that has driven a lot of revenue growth last year and continues to be very exciting going forward. So once again, VR was sort of one of our early claims to fame and is doing very well for us going forward. We're very excited about the cabled applications where you get the full bandwidth. There are, of course, wireless AR/VR devices, but with wireless, you have many issues. First of all, it's lower bandwidth, which means the experience is not as good. Secondly, it can be interrupted and can be experience a lot of crosstalk, which is not good for the overall experience. So we believe wired or cabled VR will be here for a long time. And we believe Sony alone has over 50% market share. So for us, it's a big win and is driving a lot of growth for the company. We're excited about it. Okay, next slide, please. Okay, but very importantly, the hyperscaler or data center market is really the most exciting and largest opportunity for the company. And you see a sampling of customer names on the left and on the right. In North America, we are engaged heavily with Alphabet, with Google, AWS, Meta, and certainly Microsoft. So a lot of key customers here in North America. And we expect a lot of our growth in the next few years to be driven by North American deployments of hyperscale infrastructure. And then on the right, you see some of our customers in Asia where we've historically had a very strong presence. Alibaba obviously is one of them. Baidu, ByteDance, and very importantly, Tencent. Tencent is a huge player in China. They're arguably one of the most important and biggest data center infrastructure customers. They adopted our solution for hyperscalers about a couple of years ago. They're a very important marquee design win for Spectra7, and they've put us into volume production in their systems. So it's a real validation of our capabilities and driving a lot of revenue growth as well. Okay, next slide, please. Okay, as we look at our future, we see that artificial intelligence, or AI, is a very big driver for our future. AI will be the primary driver for us for active copper cables, we believe, in the next couple of years, maybe as long as 4 years. And we think that AI is going to be approximately 70% to 80% of the TAM, so total addressable market. So it's a big thing for us and for the service providers, obviously. AI networks will be the first, we believe, to adopt 112 gigabits per second. At that data rate, passive copper is very limited in its length, and optical is very, very expensive. So we have a lot of interest from end customers and operators to deploy our active copper cables, or ACC, for up to 3 meters, 4 meters, such applications. That's the highest volume of cabling required, and is being driven in volume by the advent of AI. And we think AI networks are going to be about 3x the TAM, total addressable market, for us as compared to traditional connectivity. Active copper cable technology, which is, of course, we've pioneered and developed, supports AI very efficiently. And active copper cables technology is now proven and highly deployable. Let's put it this way, without getting to naming end customers and end networks. We think this is going to be a big driver of revenue for us in the next few years, as I mentioned. Okay, next slide, please. All right. Now to just put it graphically so you can see what we think is going to happen here as speeds and feeds move up. So on the far left, you see 100 gig of total throughput. That was really the world of deploying passive copper cablings and also some optical interconnect. We think optical is going to be around for a long time. There are many, many applications where you need the length that can only be provided by optical. And so we think that market will continue to grow. Its growth may be a little bit abated over the next few years, but it's going to be around for a while. But passive copper very quickly runs out of steam, so it cannot really serve the needs of the cables up to 3-4 meters. Just doesn't work. There's too much loss, if you will. We think it really peaks out at about 1.5 meters. 1.5 meters is not very efficient. It's not long enough to support many of these networks. However, with active cabling, active copper cabling, which is our technology, you can easily solve the problems of passive cables. And we expect significant growth in the next few years as we go from 400 to 800 gig and even 1.6 terabits. So the future is good. It looks very, very good for us. There's certainly not, at this point, there's certainly no argument by customers or data center operators that ACC or active copper cabling is part of the future, a big part of the future, very attractive in terms of low power and the ability to get cable lengths longer and thinner as well at the same time. So it's a very exciting time. I will tell you, some years ago when I joined the company, there was a lot of, let's say, doubt about ACC's active copper cabling really having the performance and the reach needed. But I think those concerns are gone. Customers now fully understand it, fully appreciate it. There's a lot of demand for ACC or active copper cables. Very exciting time for us. Obviously, with that also comes competition, but we are so far ahead. I mean, like I said earlier, we've forgotten more about active copper cables than our competitors combined have learned so far. And this stuff is not really easy. It's quite tricky, quite difficult to get the performance at low power. It takes many years to develop and perfect it. We've been doing it now for about 13 years, 13 years, long time. Like I said, we've forgotten more than our collective competitors have learned so far. We're happy with where we are. We have a lot of excitement around the product and lots of design wins. Okay, next slide, please. Okay. So speaking of all the options available to our end customers, this tries to summarize it for you. So on the left is passive copper cabling. On the right, some alternatives. So let me start with passive copper cablings. Passive basically is indicating that there's no electronics and it's that simple. It's just a piece of copper cables with connectors on either end. the length of those taps out at about 3 meters. It's obviously the advantage is the lowest cost. There's no semiconductors, there's no boards on either side of it, so it's really inexpensive. So it's lowest power and lowest cost. It's plug and play compatible. However, it has significant limitations. The first of those is that it's limited to 2 meters, and that's being kind. It's usually about 1.5 meters at higher frequency and higher data rates. So it's very, very short cables are limited in their application. The cable gets bulky, very thick, so very heavy gauge copper. So it creates issues for cooling and ventilation within these data centers. So it's difficult to route and blocks airflow within the data center. So simple passive copper cables are really limited in their application. The speed goes up. That's, I think, universally accepted in the industry at this point. And then on the far right, there's some alternative high-speed solutions. There's obviously optical. So active optical cabling, that's obviously fiber-based, fiber optics-based. It has certain advantages. Basically, essentially unlimited. You could say it's unlimited in length. You can get up to many kilometers, and it works. And but however, it's very costly and it's very power intense. It's been around a long time, and people use it for long-distance telephony, for instance. Active electrical cable, or AEC, is also an interesting solution that can get all the way up to 10 meters. However, it's got many issues. It's higher cost. It's basically a stripped-down AOC, or active optical cable, where you take out the optics and all the rest of the electronics and components have to be in place. So the cost is almost the same. It's a little bit cheaper, but it's almost the same as optical interconnects. It has many of the advantages that we have, but it's quite costly, and also it's higher power dissipation because you draw a lot of current for the optoelectronics devices and you don't do any optics. So it's quite cumbersome, I would say. It's an interim solution in my mind. And it has latency issues, which we'll talk about in another slide. So where we are is in the middle of this, the active copper cable category. And the beauty of this is we can get to lengths up to 7 meters. Again, 7 meters in many applications. And we get up to 100 gig per lane, which gets you all up to 800 and 1.6 terabits. So it's 800 gig and 1.6 terabits. So it's not limited in speed by any means. And it's obviously lower cost than optical cabling by far. We think about the 10th of the cost roughly. And it's obviously the lowest, absolutely the lowest power dissipation of any of these options, other than passive copper, which has no electronics. But it's much lower power than optical cabling or AEC, as it's referred to sometimes. These cables are thin, they're light, they're inexpensive, and they're very flexible. And they're good for airflow within the infrastructure. It's high quality data transmission, plug and play compatible as well. So it's a very attractive technology that has huge benefits, both in terms of cost, in terms of power, in terms of compatibility. That's why we're getting a lot of interest in our ACC solutions today from many customers. We're very excited about where we are, and the adoption of this technology is unprecedented. So it looks very good for us. And we expect revenue growth, significant revenue growth, and revenue contribution from these data center ACC devices, certainly next year. Okay, next slide, please. Okay, now this shows you a little more comparison between these alternatives I just mentioned in terms of power and speed, if you will. So there's basically three comparison points. Optical, which is the most expensive and most power hungry, is the top on the slide, followed by AEC, or active electrical cable. As I mentioned earlier, AEC solutions are sort of a stripped down optical interface. They're interesting because they're compatible with all copper connections, so you get some of the advantages of that for sure. And it's a little bit lower power than optical. I show here 20 watts, but I'm aware that there are some players in this category that are a little bit below 20 watts, maybe as low as 15 watts. So it's significant power savings compared to optical, and there's also cost savings. It's a good first-generation solution, if you will, for all copper cabling. However, without a doubt, active copper cabling, which is our technology, is very, very impressive and attractive in terms of the lowest power, roughly 3 watts up to 800 gigabits per second. So it's very, very low power, lowest power, and as well lowest cost solution out there. So these alternatives, AEC and optical, are much, much more expensive. And of course, AEC does save some power, but it's nothing like our solution, ACC, at the bottom of the power curve. So we're getting a lot of interest in our technology, a lot of design wins at 800 gig. We cannot disclose all the design wins we have, obviously, because they're all under NDA, but it's tremendous activity, and we're really looking forward to the ramp over the course of the next 12 months. All right, next slide, please. Okay, this shows you a little more comparison between AEC and ACC. So what you see is that we're better. We're on the right side, ACC, of course. We're better in almost all attributes. And there's a little bit of a length or reach advantage to the AEC solution. But ACC has definitely huge advantages in terms of power and cost. And then there's another issue that operators have to deal with called latency. Latency is the delay in the signal as it goes through their system. And with our solution, you have very, very low latency of about a nanosecond. I mean, it's very, very short. It's very attractive because in essentially 1 nanosecond is almost no delay. But if you look at AEC, because it's basically an optical solution minus the optics, it's about 250 nanoseconds. So that's a pretty noticeable amount of delay and latency from the input to the output, and can affect the user experience in many, many ways. And in terms of CapEx, or the actual intrinsic cost of these technologies, you see that the so-called AEC is a lot more expensive than our technology, ACC. We're much lower cost, less than half actually of the AEC type technology. So I hope that's not confusing, but anyhow, huge cost, power, and latency advantages over all other solutions. So you can think of ACC, which is our stuff, as basically a bottoms-up optimized solution that's addressing a very high volume market that's growing rapidly over the course of the next few years. So now you know why we're so excited about this. Been doing it for a number of years. Like I said earlier, we've forgotten more about this than our collective competitors have learned so far. Okay, next slide, please. This slide shows you some more details, some quantitative numbers to compare. So AEC, which is active electrical versus active copper cablings, they're very, very distinct differences. You can see in terms of power, how much we save, 17 watts or so. And in terms of switch power, it's also very, very impressive. Huge savings in the power of the switch itself. And in the data centers, that corresponds to about 3.4 megawatts of savings. It's quite marked, quite significant from a cost perspective. Hyperscalers are very focused on the energy consumption because they consume so much energy. They actually have to have, in some cases, liquid cooling, believe it or not. And this is quite marked in terms of the power savings of interconnects. Okay, next slide, please. Okay, so how do we expect this market to grow over the course of the next few years? So we see expect very significant growth, probably one of the highest growth segments in the semiconductor industry that I know of. So we expect it to be growing at least 70%, 70, compounded annual growth rate, or CAGR, to cross over $1 billion of revenue by the time we get to 2027. This is huge. And it's a real seed change in the interconnect market. We're not going to be left alone. We're going to have competitors. We know that. We welcome them. It really adds validity to the technology. That's going to take them quite a few years to figure it all out to make it work. This stuff is really not simple at all. You can see how many years it's taken us to develop, harden, and deploy and learn from deployments and feedback that learning to improve performance, finally enter the data center market. So it sounds simple, but it's really quite complex. I can tell you that. Anyhow, if you could go next slide, please. Okay, some financials here and outlook on our business model. So this is quite a large and high growth market that we are serving today. Our revenue has grown, as I mentioned last year, a little over 100%, and we expect over the course of the next 4 years to be at least 60%, 60 revenue growth. That's very impressive, I think. I believe that's one of the highest growth rates in the semiconductor industry, particularly when you look at gross margin. Our expectation is that gross margin will be between 60% and 65%. We're very close already to the 60% number. The last 4 quarters, we've averaged 59% gross margin. I think everyone would quickly agree that that's great gross margin. Very few companies can get to 60 and above 60%. Long term, we expect EBITDA, our earnings before income taxes, anyhow, to be about 25 to 30%. That, I think, is very impressive. It's one of the highest rates in the industry. We're a capital light company. We're fabless. We don't manufacture ourselves. We outsource all our fabs to well-known sources in the industry, very credible, well-known sources in the industry. So very, very manageable CapEx, if you will. Okay, then my last slide. The key financials are summarized here. This is looking at recent performance. Again, to remind everyone, we're dual listed. The primary listing is in TMX in Canada and OTCQB as SPVNF. So just to give you a quick summary of financials, the share price is roughly 64 cents Canadian. The market cap is just under 20 million, 20 US. The trading 12 months revenue was about $12.6 million of revenue, expected, as I said earlier, to grow quite rapidly. And gross margin for trading 12 months is average 59%. Very, very respectable, I think. I'm proud of it, and I think it has opportunity for upside even from here, getting above 60%, 60. Insiders have voted strongly in favor of the company, have put their money where their mouth is, if you will. Between me, my chairman, and the rest of the board, we own 12.6% of the shares outstanding. I think a very strong and probably a real benchmark in the industry. We do have some convertible debt, totals $8.6 million. And common shares outstanding are just a hair over 40 million shares. So in a nutshell, that's who we are. That's the market we're going after. We're very excited about the opportunity. The market is coming to us now, especially at 100 gig. That's the new development for Spectra7. We're proud of our team, we're proud of our customers, and we're proud of our investors. Thank you very much. I'll open it up now for questions. Questions, please.
Yeah, great job, Raouf. We do have a few questions for you in just a few minutes. So you did mention AI as a big driver to generate orders for your products in 2024. So talk about how big is that opportunity in a data center? And is there a lot of cables or high value order for each data center?
Absolutely, yes. And so what's interesting is that in AI data centers, the number of cables required, high-speed cables, is roughly 3x the number of cables in a traditional data center. So it grows our TAM quite materially over the next few years. And it's obviously, it's just about upon us, as you would see from various competitors and service providers.
And for the major data centers like Microsoft or Amazon, do they order your cables directly or do they go through cable manufacturers? How does that work?
Yeah, that's right. Typically, we provide our devices, our chips, if you will, to cable manufacturers. I mentioned some names earlier. And then the data center operator would buy their cables, finished cables, with our device embedded. So there is one chain in the middle there, one step in the middle.
And we see that you already have orders out of Asia. So can you continue to win more business there with other data centers? What's your plan?
Yes, absolutely. We have engagement with all the major data centers in China, and they tend to follow our top customer in China very, very quickly. They are the leader. They establish the technology and give us credibility, and then they're quickly followed by other guys. So yeah, we expect our business in China to grow.
And a few questions from our viewers. So AI activity seems to be picking up, as noted, by the fantastic NVIDIA financial results and data centers. So are new AI data centers the biggest driver for your future revenue versus legacy data centers?
Absolutely, yes, that's going to be the case. We see it already. Very, very attractive, very impressive.
And how would you characterize the revenue opportunity for S7 in an AI data center versus the legacy data center?
It's about roughly 3x per data center. So it's much higher than a traditional data center, yes.
And could you also comment on the timing of the revenue opportunity for S7's chips in this new AI data center? Specifically, how many quarters would it take for the revenue to be booked by S7, and what is the rough percentage split among the quarters?
Yeah, so I think we're going to see a lot of growth starting the middle of next year. It could be as early as Q1, but it's most likely sort of around Q2, Q3. And the only thing that's slowing it down is not desire to deploy it, but it's more availability of some other components in the network. Not our components, but some other vendors who have important switch devices and other technology that is a bit behind the curve and is holding people up right now. But I think it's insight. Sorry, it's insight. It's within 1 to 2 quarters, and we see it, and we see these holdups. We see these issues getting resolved very quickly within months, probably. Go ahead.
Thank you for that. Yeah, Jimmy Warden asks, when do you anticipate orders from your AI data center design win that was announced in June of 23?
Yeah, well, we expect that win to come in probably sometime in the middle of next year in terms of volume deployments. And we have a number of other wins as well. Some of our customers are executing more aggressively than others, and we have developed systems and they're testing them right now for production. So all sizes are not equal. We have some guys who are going to provide revenue for us sooner than that.
And Tony Keller wants you to talk about your patents and what exactly do they protect?
Yeah, we have 55 issued patents, something we're very, very proud of in multiple jurisdictions, US and other countries. And they protect all kinds of things. There's one that's what people call a fundamental patent, which patents the whole concept of an active copper cable, putting a chip in a cable to equalize and boost the signal. So we have what's called a fundamental patent that covers it. And then the rest of the patents are all how you do it. You know, the implementation, design work, how do you compensate for losses, how do you compensate and create equalization, and so forth. So we have a very rich patent portfolio that I think blankets the whole space quite efficiently.
And a viewer, AM, says, thanks for this presentation, great products. But despite good results for 2 years, the price share dropped a bit. So do you expect it to go back to $2?
You know, it's very hard to predict and project where the stock price will go. There's obviously many variables that are out of our control. We can only talk about what we're doing, our own execution, if you will, in developing products, approaching the market, winning designs, and getting to volume production. But we don't really control the market, the stock market, and where the stock goes. So I think there's sort of from what I can tell, sort of a declining interest in technology right now, broadly speaking. Many of our customers and their customers have seen these declines in the stock price. And it's quite concerning, of course, to investors and the companies themselves. I don't like where we are. I think we're way undervalued. That's my opinion. Way undervalued. But I think that will fix itself, not just because the market eventually will go back to more normal trading valuations, but I think also our execution as we start deploying in this 100 gig market will speak for itself. So I'm looking forward to that.
Last question from Anthony Fitzgerald. Does the company have any debt or access to sufficient working capital to accomplish its growth objectives?
Yeah, we have, yes, as I talked about earlier, a little over $8 million of debt. Of course, if we need more working capital for a company this exciting and this growing, it's not going to be hard to raise it if we need it.
Great. Well, thank you so much, Raouf. We do have more questions for you, but we are out of time. So I'm going to send these questions to you. You guys can answer on your own. And we really appreciate you joining us for our conference today. And we'd love to have you back in 2024.
Thank you. And thanks for having us. I've enjoyed it. Take care.
All right. Thank you so much. Okay, everyone, stay with us. We'll be back at 1 o'clock.